Okay, hello everyone, and welcome to another technical analysis webinar with Trevor Neil. Thanks for joining us. As always, we'll aim to get through everything in approximately 30 minutes. If you have any questions for Trevor, please don't be shy. You can ask them in the questions tab of your GoToWebinar window, and I'll pass those questions on to Trevor because he won't be looking at them himself. We'd like to remind you that this webinar will be posted to our YouTube channel in a couple of hours' time. So if you'd like to watch it again, you can do so there, and we'd love it if you'd also subscribe to our channel and click on the bell to get notified. The webinar handout can be downloaded from the Handouts tab of your GoToWebinar window. If you're having any problems locating or downloading it, please let me know in the Questions tab and I'll send you a link. We strongly recommend you use the Handouts tab. If you're new to trading, it'll help you understand the different lexicon that Trevor uses. There are two handouts. Actually, there's another CFD guide there, which gives you a guide to the different products that we offer at FX Choice, their technical specifications. And if you're watching this video on YouTube, these handouts are available in the description box. So please go down there and you can download them there as well. For those of you who don't know Trevor, he's over 40 years experience, a very experienced technical analyst and trader, worked for large companies such as Merrill Lynch and Bloomberg, where he was head of global head of technical analysis. So Trevor, over to you. Without further ado, over to you.
Yes, okay. Well, it's quite a week. This time last week, we were sitting with soaring markets, but really very, very anxious. And did take a bit of time to warn that with these sort of parabolic shapes we were seeing in some of the markets, there was a very high probability of a very sharp pullback, and reminding us what a sharp pullback looks like and how sudden and vicious it can be. And we had warnings, longer term warnings through divergences in many things. And but the markets were still at that time making new highs. But it was Thursday, really, the market cracked. And the crack, in case you've been living in a cave, occurred because of the what they're calling now the Treasury trauma, which was a sudden break up of yields to 1.5% in the US. And here is the Treasury note futures, which moves in the inverse direction to the yield itself. So when the yield goes up, it goes down. And this was Thursday and Friday here. So that sudden rise in yield, not a gradual rise in yield, but a jump in yield, had an effect, of course, on the stock market, on the dollar, and through the dollar, through to many other things, causing things which are moving ahead nicely to react. Some of them have reacted a lot, some of them, and look like they're stabilizing. Some of them look as though they've got further to go, pull back further before they perhaps stabilize and turn up. But we've had this, that was it, that's a jolt. That is a very big thing to happen in the market. Interest rates don't usually move so suddenly, and the market is not often surprised by interest rates in the way it was. So how did it affect us on the euro? This is the weekly chart of the euro firstly. So we had previously been sort of anxious about this bearish divergence that we see through the RSI and the MACD. We talked about that a lot, but all through this year we've been drifting in the euro. But here's the action, whoops, of the euro daily, and here it was Friday. It's Thursday. We had surged early in the session, continuing the breakout. It looked like we were breaking reverse head and shoulders. A lot of people were talking about shoulder, head, shoulder here, breakout occurring here, but we didn't finish Thursday through the neckline of the head and shoulders. The neckline would be across here, so it never was a breakout. The head and shoulders didn't complete, and then we finished very weakly on Thursday, and then on Friday we absolutely dumped here. I've drawn in a rising channel in here now with solid support at 119.50, I think, for it here. There is resistance at 122.40, and of course the high at 123.50, but it still looks vulnerable. You know, we're challenging, and maybe by the end of the day we'll have broken down from this channel. We could think of it like a flag, rising flag here, and come down and really retest this level right down here, this major level around 119.50. So the rise has at the very least been interrupted, and it looks quite vulnerable, and it looks soggy, and it looks like it's going to be difficult to push ahead in this particular case. It doesn't look like it's stabilizing yet, and I would expect, at least in the early part of the week, for it to continue to go lower. Now moving to sterling to pound. Let's remind ourselves of the weekly chart here. So remember, I'm keeping this on here, A, B, C, measuring up to D. D's above us on the chart here, right up here at 146. Well, we're nowhere near that now. We got to the 161.80. I'm keeping it on there because I still think we're going to get there. So the just also another thing to bear in mind as technical analysts, go back here to see what we're up against. Sorry for doing that. We're tackling this double top here, which was back in 2018, and we probed into it last week and then rejected it because of that dollar-related move or interest rate-related move. And we were expecting, if you remember, though the chart looked extremely strong, it was hitting this resistance. So had this day last week, there was no indication that it was going to stop, but there was this significant double top here, and I said I'd be surprised if it went through it without, you know, at least stopping or hesitating. But the technicals still on the weekly look very good here, rising lows in the RSI. I know it's high, but it's probably just correcting. The MACD, weekly MACD is still positive, so that looks good. So for many traders, they will be looking at this kind of pullback correction in the RSI as a setup for a buy opportunity here in the direction of the weekly MACD. The last time we had this was here, there. So it could be another one of those. So we'll watch how this develops, look for signs of steadiness to indicate that this pullback is complete, and we're not going to need to go back all the way to test the first support that comes in for cable at 137.50. So we're at about, I think, about 50% of that now. Let's just measure it. I'm going to measure this latest move from here to here. Yes, it's at 50% of it. So if it was going to stop, this would be quite a good place for it to stop. It's too early to say. I'm watching the RSI very closely. It's come below 50, which is very often, as weak as it gets in a strong bull market, you're not going to get oversold, are you? So buying when it comes up through 50 has been a good strategy because the trend is so strong. It's doubtful it's going to get right down to a deeply oversold state again. It's below 50 currently now. It's at 49 or 48, a move up above that would be the setup for many swing traders to buy in the direction of the trend itself. The sterling euro, and we have to look at the weekly on this one for sure. So it's pulled back to this support level here, the cigar, as I could call them here, this consolidation here. So we broke out, it surged, didn't go up to the 100% level, which I did think it was going to do, and now it's pulled back to rest on support. So the technicals here are still looking positive, rising lows, good level. This support, this breakout point is now below us, so it's now support. There is very little resistance up to the next cigar, which is a double top from 2019-2020 here, which I think is where we are headed. The RSI is extremely high, but still pointing up. The MACD on the weekly is also pointing up, so those are still bullish. But what have we got here? We've got the same pattern here. The RSI has come back below 50, and it's threatening to turn up again. And I think a good session like this will turn us up. And for swing traders, that will be the dip and the completed dip. And if it is, then look at how weak. The most generous place to start is from there. We haven't even come back 38.2% here. So the weakness of the pullback means that this is a very strong market. The impulse move AB is very strong, the BC is weak, so therefore the CD is likely to be strong. And don't forget, there's very little resistance above this high of last week here. So, you know, could be potentially setting up for a swing higher. Now, the commodity currencies, which had all been doing so well on the back of the sort of commodity boom, what has happened here? So let's just remind ourselves of that. So last week we had surged up to the 61.8 level, but again, we'd drawn the cigar in that big double top in there from 2018. I did say that I thought it'd be very unlikely we could get through that. It's a very significant resistance point, long-term resistance point, without hesitation. And so lo and behold, we spiked into it, and we pulled back sharply. So what does the pullback look like? Well, there's Thursday, there's Friday on it. Now this one has pulled back 50%. In fact, pulled back 61.8%. So big pullback compared to 38.2% pullback on sterling. We'll look at the RSI too. This isn't just hovering below 50. This went all the way down and went to 35 there. So it nearly got oversold here. So this is the message of this is that if this is stabilizing in this support area here now, it has been savaged hard, and it's going to struggle to make another strong move up. So the CD move of it is likely to struggle to get through this high here. So this is now not as rampantly strong as it looked. The similar picture on the New Zealand dollar. I'm not looking at the Canadian because it's so similar to the Australian dollar. Both big commodity producing countries. Okay, so again, glance at the weekly firstly. We had powered ahead very, very strongly, but again, I don't know why my cigar has moved away like that, but there it is up there. Why is that? It's because of that. Okay. Yeah, here we are now. Okay, so here's the big cigar in its proper place where we had it before. Massive, massive multi-year, 2016 through to 2018, a consolidation here. It would be a shocker if we went through that, which it did look like we were doing up to the middle of last week. We probed hard into that there. This has been so exceptionally strong. The Fibonacci projection, I must remind you, A, B, C, and we got to 61.8. The 100% is through the high here. So this was an obvious place to stop and stall, and now we've eased back. But how are we easing back? That's the key thing to look at. We had the Thursday, Friday particularly savage, massive area of support here at the 72 area here. Look at this here. I want to give it a cigar, this one here, to remind us how important that level is here, how solid that level is here. And we've come back to here, and so far today, we've stalled. Look at the RSI. It's come down below 50, and it looks like it might be stabilizing. And, you know, in this whole move up here, we never went oversold. We wouldn't go oversold because the market was strong. But the signals, the good signals were generated every time the RSI moved up through 50 from below. These were all good places to buy the market. And maybe this is going to be the case again. It hasn't happened yet, but I wouldn't be surprised if it has by this time next week. And swing traders will have said that's that. And we've had a big pullback, but it was a big pullback. So percentage-wise, be respectful of the size of this pullback. The New Zealand dollar, Japanese yen, I really want to talk about this because the Japanese yen is the dog. Actually, the Swiss franc is also the dog versus the dollar. The move up the pullback here is to 38.2%. So if it holds here, then that will be very good indeed. But we really haven't unwound the overbought condition enough, in my opinion. And so it would be disappointing for swing traders if it doesn't get down a little bit more. So it looks as though it's stabilizing a bit earlier than many people might hope. And, you know, just remind ourselves how strong this market is. So here we are here. We're challenging this top. We've got these tops, but we're going back to the 2017 highs here, and we should be punching into that. And we've got a bit of ground, free blue sky there that could take us much higher. So I wouldn't be surprised if this market doesn't give us the chance to buy the swing traders by correcting enough and just regains its composure early. Now, one thing I did want to show you is my relative rotation graph. I've had some interest in showing this to people. So can I just confirm, Dan, that you can see my relative rotation graph now rather than my normal graph?
Yes, we can see yeah.
Okay, so some of you will be new to this. Very, very briefly, you can see this type of graph for yourself. If you register, it's free. RelativeRotationGraphs.com is the website. Julius de Campinar and I developed this. He is, I must always say, is the brainy one of the two of us. And this is available on Bloomberg, on Refinitiv and other professional platforms, but not available to retail investors. Now, what it tells you in a very simple and clear way with this dynamic scattergram is anything which is right of 100 is stronger than whatever is here. And in this case, it's the dollar. So anything, the pound is the strongest currency versus the dollar. It's furthest to the right. Next is the Australian dollar, then New Zealand dollar, and then here, quite close to the US dollar, so correlating with it, not offering outperformance opportunities, is the euro. We've already seen that in the charts. Over to the left is the Japanese yen and the Swiss franc. And so these are the weakest. These are underperforming the dollar. And so you've seen, for example, I was pairing off versus the Japanese yen. It's better to do that than to pair off against the dollar. It's to go through, to do the cross through to the Japanese yen itself, because the yen is even cheaper than it. Anything which is higher than the horizontal at a 100 is with positive momentum. So all these ones above 100 here, like the pound, like the Australian dollar, like the New Zealand dollar, they're also the trend in outperformance of the US dollar has got positive momentum. The Norwegian crown is losing momentum here. So it's going into the weakening quadrant. It's still outperforming, but it's weakening. And these tails here are, this is Friday, Thursday, Wednesday, Tuesday, Monday, Friday, and so forth, is where it's coming from. And you can see that this rotates. So while I've got this up, let me show you what I'm coming on to now, which is Bitcoin. Sorry, I've brought up the wrong one. Cryptocurrencies versus, not the Bitcoin, but versus the dollar. It's all free, incidentally. So we had this big sell-off in the cryptocurrencies. Here's the dollar here. Here's Ethereum crossing over now into the lagging quadrant, underperforming the US dollar. And the things to the right, furthest to right, Binance is the strongest of the cryptocurrencies. Here, where is BTC? BTC is here. So there's still a lot stronger. But look how it's come round here, the direction. That is the it's still outperforming, but it's lost a lot of momentum. And the direction they're heading in is southwest. So they're heading towards the lagging quadrant. I wouldn't be surprised when I show you this next week. Some of these will have moved across into this quadrant here. So the air has been let out of that balloon. So let's go to
Trevor,
Bitcoin
can I just
itself.
stop you for a second?
Yes.
We've got a question from Poncho. I hope I've said your name correctly. Thank you very much for your question. He asks, I always hear Trevor talking about a cigar. Please advise what this means.
Okay, forgive me. That is not an official chart pattern. It's just I award a consolidation cigar because I happen to love cigars. And so if you ever want to bribe me, that's what you should buy me.
Loud
so
and
this
clear.
cigar, yes, the Cohiba is my actual brand, and Siglio number 6 is the actual specific
Well
one. If you want to really impress me. But it's a cigar shape, of course, is what it is. But what I'm doing is doing it as this ellipse is what it is, and just to mark the consolidation ahead. So when we're moving up like this, as we were doing in the New Zealand dollar, we look left. What happened the last time we were here? The last time we were here, there were enough sellers between 2016 and 2018 to halt the advance. And for anybody who traded between 2016, the end of 2016 and 2018, traded in this comparatively narrow range here. An awful lot of buying and selling took places at very similar prices, and we've moved all the way back up there. That is a very, very significant resistance level. Consolidation resistance is made up of width and height. This is very wide and it's very high. I've drawn it as an ellipse just to emphasize it there and put it in the center of it. But because it's very difficult, I mean, it's usually very difficult to be very specific about it. So that's why, that the highs don't line up and the lows don't line up precisely. But you can see that was a massive long-term consolidation there. So I draw them as these ellipses because they're not support levels, they're areas of resistance. So forgive the me making up a technical analysis term. I award it a cigar when it has width and height in the consolidation.
Actually, Trevor, thank you very much. Thank you very much for your question, Poncho.
Yeah.
We actually have another question. Jordan is asking this question. We've never seen this type of chart before, the one with the curved lines he was showing you a few minutes ago. I'm assuming that's relative rotation graphs.
Yeah.
Can you please describe a little bit about these charts? What do we look at?
Yes. Okay. So actually, we have shown it before. I don't show them every week, but I will actually.
Please do
from now on, because people are really interested.
Yeah, they are.
And it's also what institutional people use. They do use it. It's a very popular function on Bloomberg and on Refinitive's Icon platform. It allows you to see a complex message comparing like with like. It answers this sort of question: what is best? You've got a choice. Cryptocurrencies, what one is it? And how do you compare one to another? The prices are very different from each other. And so these are normalized. So you can say furthest to the right. So with this vertical line here at 100, 105, 160, very much. So that is actually 60% stronger than the dollar, is what that literally means. Here, and so it's furthest to the right, and then you've got going across here, you've got that message to the weakest of the group that I watch is Ethereum and Ripple, and over here, and they are actually underperforming because they're on the left-hand side of 100, and the further to the left anything goes, the more it's underperforming the benchmark. Now, I can change the benchmark here to something else. So it could be, instead of the dollar as a benchmark, I can say, well, what's better than Bitcoin? So now I put Bitcoin in the middle, and it's still Binance, but here, so we've got many more to the left-hand side of Bitcoin, because Bitcoin versus the dollar was a little bit to the right. So anything to the left of it is now moved to the left of this vertical line here. But there is a secondary message, which is the vertical axis up here. So we have a horizontal line at 100 here, and then this. Now what that measures is positive momentum. So the things that are highest in this, so the highest here is NEM, XEM, and it's also outperforming. So it's outperforming with positive relative momentum. It's going up and getting stronger on a relative basis, relative to Bitcoin. Here, Tether is underperforming, but its relative momentum is increasing. It's, if you like, low in the list of relative momentum of performance, but moving up the list and moving up the list faster. Now, things that move up a list faster probably go further. So the inference is that this is going to join. Maybe it's a bit close, a bit far away to say that, but when it's over here, I would say it's going to cross over here. So that's the interpretation of it. Anything which is close to the benchmark is correlating with the benchmark. So if we go back to the currencies, if we go back to the G10 currencies, sorry, here we see the euro is very near the crosshair. This means it's moving with the crosshair. The crosshair is the dollar. If you want to make money, it's very difficult to do that if you buy the euro dollar, because it's really not, it's outperforming, yes, but not very much. If you want to get outperformance, sterling's your place, Australian dollar's your place, New Zealand dollar's your place. Avoid or do the opposite, because something weaker than the dollar is the yen. Something weaker than the dollar is the Swiss franc. Here it is. This is a unique picture, a very valuable picture. How can you do that complex thing? 10, do you know how many combinations there are of 10 charts versus 10 things? It's not 100. It's not 10 times 10, it's hundreds. So, you know, to actually compare every currency with every currency in the G10 is hundreds of charts. But here it's in one chart. You can see it very, very quickly. And also which way it's heading, and you can see the rotation that's going on and where it might head. Okay.
Thanks. I hope that answered your question, Jordan. We actually had another question slammed in there. It says, "Does this mean
we're going to run over? I'm afraid."
Yeah, I'm sorry. It does. This is a question from Oluwane Femi. I hope I pronounced your name correctly. It says, "Does this mean that the price of Ethereum will most likely fall in the coming days?" I suppose it's difficult to answer that question, but I think.
Well, you see, we got the message of Ethereum, and what we're seeing is its situation compared to the dollar and compared to Bitcoin, and so it's, let's say, not attractive compared to other opportunities, other alternatives you've got. But then you would go and look at the chart itself. And of course, this is not an absolute chart. This is a relative chart. This is comparing something to something else. But if you want, you would then go to the Ethereum chart here, and you say, what does the Ethereum chart do? Okay, this is underperforming. Okay, although it's going up, it's not going up as fast as the other things. There, that's what it tells you there. So so if you look at another chart and it looks like that, actually you can see that if you buy the other thing, you're getting outperformance because you're ranking the performance. It's a very, you see, it's not an easy thing to do just with a chart here, because that looks like a good chart. So does Bitcoin look like a good chart there? But which is better? Okay. They both look good, don't they? You can't tell by the price. One's at 30,000. You can't say Bitcoin is better than Ethereum because it's 30,000, whereas Ethereum's only 1,500. That doesn't make Bitcoin better, does it? It's how much it moves up and how much it outperforms the others. And that, to do that, you have to divide it into the others. Divide it. That's relative performance. Okay, I hope that's clear. I'm sorry, I'd love to do that more slowly and spend more time on it, but
no,
really, if you've got we've got opportunities, and really you can put your money where you like. So what you have to say, well, I haven't got all the money in the world. I need to use get maximum bang for my buck. Should I be in this or that? Which is the best thing to be in? The best thing is if you're buying, it's a relative thing, isn't it? If you're selling, then it's a relative weakness, like the yen there. So I can now see them all together, and I can say, I'm wasting my time if I put my money into the euro, when I could put the same amount of money into sterling and get better performance from it, or gold, you know, when there's better things than gold. Okay, I like gold. It shines. It's beautiful. My wife likes it a lot, but in fact, there are better things than gold. But you can't see that if you just look at the gold chart. Well, let's have a look at the gold chart.
Yes.
We did talk about it last week, didn't we? We had a question about it, and I just I couldn't be enthusiastic. I tried to be nice because we were threatening this low here, and I said it looked extremely vulnerable. Did break on Friday really hard here, but certainly on Thursday it was also going down. Don't forget we were talking here on this day here, and I wasn't enthusiastic on Monday last week. So it's still, I mean, when you look at this, you can see this instantly on the RRG chart that it's not very good. And here it is. It isn't bull market. Doesn't look like the stock market. Doesn't look like Bitcoin at all. It looks pretty heavy looking chart. We're moving down. The only potential saving grace for it is this may turn out in the end to be a bullish flag. Fantastic if it is. This would be the flag pole, and then this would be the flag. But don't forget, we're testing the bottom of the flag at the moment, not the top. Top's at $1,900 at the moment. So at the moment, we're still extending the flag, if you like. So the case is poor for it. I do want to talk to you about silver gold ratio, because there's things going on there. So this is gold divided by silver. So this is taking the simple thing, relative performance. So what we do with multiple securities in our RRG chart and also track the history, here we're just doing two, gold divided by silver. So moving down means that gold is underperforming silver, or silver is outperforming gold. So what have we got here? We've had this underperformance of gold compared to silver, which is a long-term structure since mid-2020. But I wanted to just show you on the daily chart now. I think that we're beginning to find some support in this now. So here the RSI is starting to turn up. We've lost downside momentum here. It's an important support level on the ratio itself. So I think that this underperformance of gold and overperformance of silver is about to, at the very least, slow up, but possibly do more than just slow up. Okay, moving on to crude oil now. So we made that massive move up. We're up 200%, sorry, from the April low, despite the lockdown. Who would have ever guessed that? It has hit my minimum price objective from my long-term minimum price objective, the 100% level here, A, B, C, D. I did that, drew those lines here, back here in October 2020. A, B, once we'd recognized that C was in place, we were projecting up. It seemed ridiculous, $67. Well, we touched it last week. But what have we got? We got a cigar. Forgive me, but you now know what I mean by a cigar. We've got a big consolidation in here, relatively narrow range, wide here. 9 months of 2019, we were trading in that area here. And I said last week that it's punched into that very, very hard indeed, which shows it's very bullish, but it'd be very surprising if it can get through it without a consolidation. And it's still the same case now. I think there's more consolidation ahead. The RSI is at an extreme reading, not to say that it has to go down because of that, because it's very strong is what it's telling you. The MACD weekly is very positive there, but we are at an extreme reading. So we've come back rather, not very much really, considering the state of it. We did get a small bearish divergence here in here as a warning for it. It's pulling back here now. So far not pulling back very much at all, really. I'd like it to pull back more. I don't think it's going to need it, but the cigar comes in at 55 up to 58 really, or 57.5. Here is the big, this is quite a vulnerable move here because we made it very, very fast indeed. So we could come down a lot without much support, but it hasn't got much power behind it right now. Okay, moving to the stock market now. One thing, just going back to the gold, sorry to jump out of order, but I want to keep showing you this chart. This is gold versus the S&P. Is it better to put my money into the stock market or gold? going down as it is doing now. This is a weekly chart, so it's a long-term chart, and it has been doing since Q2 2020. Going down, that means you've been better off in the stock market than gold, and that is still the case. Gold is not your hedge at the moment. It's not even a hedge on the downside. Really, it didn't go up when the stock market has had its wobble, so it really hasn't proved a good balancing hedge. So it just isn't looking interesting. I would go as far as to say that. So let's go to the S&P, the US 500 now. So here's Friday's move here. We didn't really react on Thursday, but we did on Friday, very hard indeed. We pulled back now. The long-term picture is not damaged at all. Here's the weekly chart. You can hardly notice what happened there. We did get the bearish divergence. We talked about this, and I said one day we'll be able to say we were warned. Yes, we were warned, but my goodness, it went up a lot while we were being warned that it's gone up too far. But it has turned up. We're worried a bit about the MACD weekly crossing here, which would change things a lot. Hasn't happened yet. We've come down a bit. We've actually got the RSI down below 35 here, which for me is a setup potentially, because as long as the weekly MACD stays positive. The support here, here, and then massive support here at 3,600. So plenty to support us on the way down here. And I do think that this is going to stabilize. Hasn't done it yet. You know, I'm being a bit patient, holding my powder dry here. By midweek, I would hope that we start to see some white candles in here. FTSE, oh dear, FTSE. UK 100, weekly chart here. I had high expectations when we made this break. I can't hide it, that we were going to go back up to this cigar here at 7,100 and find it really relatively easy to do so because the drop was so fast. Well, that didn't happen. It aborted, came back to the breakout point here, and it's now consolidating above that. The MACD is just positive. The RSI is around the middle price here, so it's sort of corrected. Here on today, the RSI has come up through 35 from below, and this for some swing traders would be the pullback completed, and they'd be looking to buy this. But the trend up is now not as strong as it was by any means at all. The strong sterling is taking its toll on this index. Because of time, I'm going to skip straight to the Japanese index. So we had a pullback here, but I hope the weekly chart, if I show you here, not 20 years, but more like 30 years, or let's go back to 1990. Here, actually, even that's not enough. You'll see my point in a moment. Okay, so we are pushing. That breakout there was my signal. We were doing these calls at that time, and I got very bullish at that point. We're breaking through various resistance points. The next one here is the 1990 high at 33,100, and then the all-time ever, and whoever thought we'd see it again, ever in our lifetime, or my lifetime, was the Asia bubble top of 1989. Here we are heading towards it now. I think the chart is very bullish, still remains bullish. This is taken the RSI down to below 50, and it's now turned, if we have another bar up, actually 50.4, just above the 50% level there, that could be a setup for some traders to take advantage of this swing, being another swing like that one there. That was the last time we managed to do that. They're rare in such a strong market. Then just finally a word on the stocks. The Fang stocks are looking not at all well. They've got influenza.
Can you just remind
Apple,
people, Trevor, please, what the Fang stocks are?
Oh yeah. Facebook, Alphabet, Amazon, Netflix, and Google. If I've done it right, yeah, Fang Stocks, yeah. And
Right.
so here, many people, technical analysts were talking about head and shoulders here, high, 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 higher, high, higher, high, lower high, neckline. Here's my neckline. There's the break done with a gap, classic. The count is from the neckline to the head, and that gives us a minimum price objective for Apple down here at 114.30, down there, not fulfilled, but looking weak, and coming into the support area here, which will probably stop it. Amazon here, very threatening indeed. Here we've drawn this big symmetrical triangle here. We had hopes that it was breaking to the upside here at the end of January, but now we've traveled all the way through it down to the bottom. Looks like we're breaking down out of it to the downside. Very, very dangerous here. Got the support here at 2,870 for it is quite weak. We were very brief here. So this is a very vulnerable chart. Facebook. Okay, this is still consolidating here, but we've got a 1, 2, 3 beautiful downtrend line in place here, and it hasn't broken particularly down, but it's not looking strong. And then Netflix, okay, again, not looking weak, I would say, but it's consolidating and moving sideways, but not exciting like that, like we are seeing in other areas. Let's look at Tesla, where everybody's watching Tesla, but now when you buy Tesla, you're actually buying Bitcoin, and so you so now he's pinned himself to Bitcoin, and of course it was one of the contributors to the sell-off. We were warned, weren't we? And we've been talking about this. I haven't liked Tesla all year. The bearish divergence in here, head and shoulders potentially here, shoulder, head, shoulder. Anyway, we broke down hard. I'm going to award a cigar here. That's our support area here. We probed into it earlier in last week, and that will probably stop the fall in it. But it's not a great looking stock anymore, is it? For great looking stocks, oddly enough, you have to look at the banks. And we pull back a bit in the banks, as you would expect, but of course not so much. Now, why is that? Higher interest rates are very one of the things which make banks have made banks so bad is the low interest rates and negative interest rates. It's hard for a bank to make money when it can't charge interest and when it's so competitive with interest. And so if we look at JP Morgan here, yes, we've come down here, and it's just really corrected its extremely overbought condition here. But I think this is still a chart. I hope it will come down a little bit more, perhaps down to 144 area, the previous resistance, now support for it, which I think will be a setup for another buy. It needs to correct. It was overextended there. Let's quickly go to Santander. Go to the European ones. This is also broken out of this these three tops here, and I think that is looking good for heading further upwards. The BNP also here. Look at that. It's a great looking chart here, having broken those highs, breakout, retest, and on its way again. And looking at the weekly chart of this, we're heading for this, I think, this resistance here, which I think we're going to clear. I think banking stocks have got a lot of bounce in them. Even the UK ones now are beginning to look a lot better. So here's HSBC breaking through these highs here, consolidating just above them, and I think poised to move forward from there. And Barclays here, we had a series of resistances there, breakout, and now consolidating and looking like it's getting ready to leg higher from there too. So out of fashion, hated for a long, long time, because how can a bank make money when interest rates are near zero? Well, they're not near zero now, and all sorts of things are improving in the background, including the economy in not in Europe but in the US, and so the banking sector is reacting to a very deeply oversold condition. I so apologise for your time.
We've gone over by 15 minutes today, Trevor, but it's okay. I'm sure that everybody will be very appreciative of it. Very thorough today.
Okay, well, I'm glad to go through the RRG. I hope you understood it. I was talking to Dan about doing an extension to the explanation I've got of the technicals I use, which doesn't mention RRG. It just mentions the indicators I use on my charts. So I think I will do that, try and do that for next week, that the explanation of the technical analysis I use includes RRG and a brief explanation of RRG. But if you look on YouTube, you'll see some recordings of me explaining it if you want it in more detail, longer detail, and it's very, very useful. You can put any group of things versus something. If you want to pick the best stock in the DAX, put the DAX in the middle, and then plot the stocks in the DAX around it. That's how you use it.
Well, thank you very much, Trevor. Thank you as well for everybody who attended today. Please join again next time, same place. And don't forget that we'll be posting this webinar to our YouTube channel in about an hour or so. So if you came later and you want to watch from the beginning, or you just like to watch the whole thing again, or just a piece of it, head over to our channel and don't forget to subscribe and click on the bell to get notified. Anything else, Trevor?
No, I hope that I'm feeling generally that this is a reaction, and in some cases an overreaction, and I see the early signs, like the little flowers I can see in my garden of spring, of a completion of the reaction, and maybe the bounce is complete. But by next week we'll know. But I don't call these things prematurely. The RSI has got to sink enough in a strong uptrend, and then the market's got to turn up. So I'm not going to predict that it's going to stop here. It's got to start to turn up, and it hasn't happened yet. But I've got a feeling it will happen earlier in the week. But we'll see. My feelings are often wrong.
Okay, then. Well, cheers, Trevor. Speak to you next week. Thanks, everyone.
Thanks, everybody. May the trend be with you.
Thanks. Bye-bye now.
Thanks, Dan.
Bye-bye.
Bye, Ron.